Hello, ladies and gentlemen. Today is our another edition of financial show Modern Investing with Sasha. My name is Sasha Star, and I would like to introduce my esteemed guest. It's Peter Bennett, who's was professional Wall Street, educated
Right.
in New York University, and founder of this network, Nick Paliveda. Welcome to the show, everybody. Guess
Sasha.
one interesting observation: investing still largely depends on the politics. Who would believe that? Today, guess what? Russian ruble is about 120 and in some banks 140 rubles per $1. So guess what? People in Russia with 100 rubles cannot buy even one penny. Have you heard
Yeah.
something like that? What a joke. And the Russian economy is actually, it's collapsing as we speak. Zero. Zero. There is no value of all those wonderful companies like Gazprom and all that stuff. Nothing. It's done. It's over. And it will be even worse. Although I can't even imagine what could be worse than what's happening right now in Russia. And it's all doing of their political leaders, primarily Mr. Putin. Bye bye, Mr. Putin. Ukraine will take care of you. And however, the investments is something what we have to take care of, especially in these uneasy times. Preservation of capital is number one, number two, number three. Everything else is means nothing. Preservation of capital, and we have to, of course, really understand what market is telling us. So far, today is pretty good day. As you know, all indexes are up. Most of the capital, most of the stocks are up. Yesterday, when it was market quite a bit down, I've made some very, very good moves, primarily with the stocks like, well, Nvidia. If I have any thoughts about buying something, Nvidia is number one, probably number two and number three as well. But I yesterday got into Qualcomm as well. I thought that it lost yesterday, I think $9 or so, and I thought that Qualcomm is one of the premier chip manufacturers, and I think that there is no way for the stock is to go but higher. And of course, all energy stocks are shining. Peter, I'll let you to address that. I know that it's your specialty.
Yeah. Well, I mean, the markets are crazy. It's incredible. I mean, I don't know where to begin because there's so many points. But the S&P is down over 20% this year, roughly. Maybe it's back to 20%, and tech is down maybe 12%. And it's not because of COVID now, because the COVID news is all good. As I said in the last show, I think 99.9% of new cases are Omicron. Finally, even the blue states are getting rid of the masks. It's going away, as I predicted a long time ago. Not the only one, but we were in the fourth stage. It was typical of what happens when it goes away. So let's say COVID's out of the picture. Supply chain, it's going to still be delays and everything. Biden hasn't done enough. He's in that, but eventually that's going to resolve itself, and things will flow through. But the two big issues is energy and inflation, as I've said for a year now about energy, and now I see it for months now. I've been warning about inflation. So today, the reason the market's up is the Federal Reserve said that they would only raise a quarter point instead of half a point. It's like big deal. Here's the problem. So what they're saying is we're only going to deal with inflation and that's going to be soaring. This is going to be unbelievable and in energy, and we're going to slow down working on it. And the market likes that. But only if you're, I don't know, a treasury, you're holding bonds and you don't like the 0.5%, but it doesn't make any sense because right now, oil is now today, we're looking at 111, 112 a barrel. And I've been saying it, but it's I've been saying for a while now, I don't know where this is going. It's going to be very, very high. Now, I hate to bring politics into our show, but it does sometimes do it. But I can't resist saying what President Trump said today in an interview. And I'm not saying, I love him. I like a lot of things he did. I didn't like some, but the reason I'm saying this is because I've been saying this for a long time, and the man is right a lot of the times on financial matters and whatever. He said that this is the worst oil situation the United States has ever been in. And maybe it's exaggerating for political reasons, but I think it's really, really bad. And he said oil prices could go unlimited. And that's the way I see it, basically. I don't know if oil's going to 150, 200, 250 a barrel, maybe higher. But here's the thing. So I also heard somebody say it. I knew this is true, but an economist made a point, or a financial analyst. He said oil demand is inelastic. And that's the point I've been saying, but that's the one word you need to know, because the way I've been explaining it is, look, you have a lot of wealthy retirees now in the United States, or people who have a lot of money. They're not going to stop driving. They're not going to start traveling. And you also have people who aren't wealthy and they need to drive to get to work. Maybe some can switch, but even if it goes up $1, $2, $3 a gallon, who knows how high it's going to go? If most people don't give up their driving, and you also have to consider that travel demand isn't even at peak yet, and business travel, but the U.S. is currently using more oil than it ever has before as of February. So you say, well, if oil prices are going to have to go to the point where demand is reduced, and nobody really knows where that is, but if it's pretty inelastic, I don't know. Are people going to stop driving at $6 a gallon? Hopefully, it'll reduce demand. It will incrementally, reduce it, but it's going to keep going. And so this is the Fed and inflation is running maybe 7.5% CPI. Last month it was 9.5. So the Fed saying, oh, because of Ukraine, we're going to only raise 0.25. And everybody's thinking, oh, they're not going to raise. But this is the biggest dilemma of all they're in, which is in 2026, Medicare runs out of money. So they're going to have to keep rates low. So if they have to keep rates low and they need to raise rates high, there's no solution. And it's not going to be pretty, because if they don't, even if they raise, they're not going to be able to control inflation. Probably. We're probably in 4, 5, 10 years of 70s-like inflation. It is going to change the economy. Last time we had it was Jimmy Carter. Inflation became the issue. It's going to eat away at people's wages, and in the end, it's a tax. So it's not good news.
I have a question to you. I remember when oil was just a few months ago, was 30, $40 a
Yeah, yeah.
barrel, and actually it started to move closer to 50. There was a belief that once if it reaches $80 a barrel, then the fracking industry will start immediately get on its feet, because
Perfect question.
it would become very profitable for
Right.
them. And why do you think it's not happening so far?
Well, that's the perfect question. That's the other part I was going to say, but I didn't want to say too much, which is, so here's what happened. I was just reading about this today too. So in 2015 to 2017 and 2019 to 2020, there were huge reductions in the price of oil. So first of all, the effects of those were three, but one, a lot of oil companies went bankrupt, actually. Chesapeake, Diamond, other ones that were mid-level companies, pretty big companies, just went under. And now we're in a different environment, because the oil companies and OPEC too are all going, look, if oil has a limited life, let's say oil demand in 10 or 20 years won't be as high. They need to make their money now. OPEC needs to make the money. So today, despite everything else in the market thinking this is a good day, OPEC said they're not going to change their production plan. Even if they could increase the oil, which there's a lot of questions of whether OPEC could raise the oil prices, demand, supplies. So, but they said, no, we're happy with the price. We're going to stay where we are. So now they can't raise it. And as the number one point I brought up for show after show after show since I read it, maybe months now, is the oil companies are putting in 40% less capital expenditures, capex, than they need to maintain the current oil supplies, not just to keep, we're not just talking about increasing, we're saying just to keep it current. So supplies are probably heading way down. And that's in the face of rising demand. And they're not changing their plans a whole lot. Exxon put out a plan to 2027. And if you look at the other 60% of capex that they're spending, a decent percentage of it, I think it's maybe 10%, is going towards solar and other decarbonization efforts. They're spending money on decarbonizing their current levels, which is good news, by the way. The natural gas industry, I believe I read something like some companies were talking about like they could reduce the carbon from the natural gas 75%. So, but this is all coming out of these 60% of remaining capex. So you have bankrupt companies, you have companies that are saying, well, we're going to spend less. We're going to give our money back to our shareholders and dividends and buybacks. And we're not going to go through one of these cycles that we just went through, 2 cycles of tremendously low oil by overproducing. They don't want to overproduce. You know what? ExxonMobil and the big companies will take whatever they can get now, because look, if you were running a business and it might be a dying business in 10 or 20 years, you say, I want take some of the money out, I'm reduce my risk. So those 2 factors alone tell you that we're not, who knows where it's going, and that's going to drive inflation.
Wait a sec, Peter. Fracking is something else. Fracking is
Yeah.
available to medium or even small companies, and they can actually establish production relatively quickly. Especially, it was profitable around $40-50 level, but now with well over $100 level, it must be extremely profitable. So I
Yeah.
don't understand where are the frackers, what are they doing,
Well,
or they lost everything in the
well,
last few
some did.
years.
Some
Probably.
of those medium and small companies went bankrupt. Look, there will be, I would expect, some increase in production from the small companies, but there's big companies involved and small companies. But you know what? It all of it goes into play, but demand is up and up and up. Look, if ExxonMobil and Chevron and a lot of these other companies aren't putting in the capex, yeah, maybe you'll have some small, oil producer in Texas or something open up as well again, and that will help. But
In
the demand is
Oklahoma,
huge.
many states they have fracking available. I'm just curious why
Yeah.
people who have any capabilities of establishing fracking.
I think they will.
I don't know. Probably they probably they are
No, I
doing
think
it.
you're right. I think U.S. production will probably climb. On the other side, the Biden administration is putting in regulations of all kinds. The problem, oh my gosh, it's so crazy. But they're putting in regulations, prohibiting certain leases, making it more regulatory. They just made a rule at the EPA that they're allowed to consider, when evaluating projects, the carbon effect. And the Supreme Court said they have the right to do that this week. So you have a government that's very anti-energy, and I understand why, to a point. I mean, look, if you think the world is going to climb, but look, this is what it's going to look like. If you want to get alternatives, then oil's going to go through the sun, because, and it's not going to be politically work expedient, to say the least, but oil is, and energy, other energy, has, the fossil fuels have to go through the sun. So then all of a sudden say, look, I might as well do solar because now it's relatively cheaper. But this transition is decades away, decade, 2 decades. But the oil companies now are going, as I said, the big and medium ones are going, we're not going to spend that much money. We're happy to make the money we are. Some small ones will come online. The other side is Ukraine, of course. And so the world releases 60 million barrels of oil, together. Biden's big plan. The last time he did 50 million, didn't do anything. Now he's got the world to do 60 million. This is basically drops in the bucket. It's 2 months of Russian production total. Now, you said, by the way, that Russia's in bad shape, and they are in most ways, but Putin's partly just about his government, maybe, as long as there isn't an overthrow. But they have Russia, because of the oil before and the high prices, has put away $620 billion in reserves. So,
And what's happening to the reserves?
so what? Well, they're going to go down. No, I'm sorry, cash. I'm talking about, not oil.
Where is that cash, Peter?
No, well, I don't know. I would think he wouldn't keep it in U.S. banks, but he might.
Wait a sec. It's been arrested
Yes.
by Western and U.S. banks.
Well, you know what? I
Putin
can't
lost
get into the
cash
details.
reserves.
Well, I don't know. I read an article that he has $620 million if he keeps it in, if he can't get at any of it, he's got even more trouble. I mean, look, he has all kind of trouble. I'm not saying he doesn't. This is not going the way he planned it at all. I mean, he thought he'd just walk in the country, they'd embrace him or whatever. Now, I heard 20,000 Ukrainians are going back to Ukraine now to fight. So he's in for an Afghanistan situation, and he'll hopefully the best case scenario is he'll negotiate, something to save his face, and maybe they'll even give him those two areas or one of the areas, and he'll say, okay, you agree not to join with the West, this is what he said he wanted. So they'll say, okay, we agree not to. Well,
it is not going to happen.
Well,
Ukraine not only will withstand Russia, they will
Okay.
actually beat Russians, and I'm afraid that the war will go to Russian territory very quickly.
Well, I was thinking if Ukraine could possibly attack Moscow or something, it would feel like, but I don't know, but it could. Anyway, it'd be amazing, and it is an amazing event, because I don't think very many people saw this. They thought Russia would just march in. So, but you know what? The longer this goes, this is not good for the oil market either. So, getting back to the investing, by the way, I want to say 2 points. One, the market's down 20%, the S&P. My portfolio, if it's a good day, maybe I'm back to break even again, which is pretty good performance. But again, because I've always seen this happening with energy and everything, so I lost in certain areas. In disclosure, first of all, I dumped Delta options, because now I was looking at their cash flow at 66, even though they're profitable. And now I'm thinking that I'd sold some 65 and 70 maybe options long term, and I thought, okay, I'll hold out. Travel's going to come back. But I'm looking at oil prices now and saying travel may not come back quite as much now, and their costs are going to go up, and it may hurt. So I'm not confident. I've been saying for a long time, get defensive, but I'm even getting more defensive, more cash, because I think interest rates are going up. So eventually, I'll buy a treasury bond when rates go up to, I don't know, 10-year goes to 3% or something, where the market's hates it. But I think it'll go down. I dumped P&G too, which is a staple. But I still think the place to be is, energy number one for sure, and that's my largest holdings by far. Consumer staples is a safe place to be, relatively. And very selected REITs. You have to avoid a lot of different REITs. Mortgage REITs, I don't touch. A lot of REITs, but I have like a couple of REITs, apartment REIT, whatever. The last shows I've been trying forever to get to the non-energy, but even this week my recommendation is going to be energy, because it's been the most critical, area to be in. So, but eventually I have been discovering things. But my whole total holdings, maybe counting bonds, maybe 27. Like other than bonds, like 26, 27 companies. I used to have 30, 35, 60. I've been getting rid of the risk, de-risking, and more cash. And now I don't see cash so bad, because cash at least isn't going down. And eventually I think I can lock in higher rates.
Mm-hmm. I still believe that the high yield dividend stocks is area to be.
Oh, yeah.
Because they went somewhat down, but much less. When you're talking about 20% for S&P going down, the defensive stocks and high yield dividend stocks, they went down somewhat, 2-3% or so.
Oh, yeah.
And even on a day to day, they're all flying with vengeance. And to tell the truth, yesterday I was thinking about adding to, not to my sin stocks, but to Pfizer at least. But then I decided against it, and of course it was a mistake, because Pfizer does extremely well today. However, again, it's not paying the dividends as sin stocks are paying, not even close. And then I thought that probably Nvidia again and Qualcomm and even Microsoft. Maybe they're offering a little bit more bang for upside.
Yeah,
If there will be
I
upside,
like Microsoft, and
Microsoft.
I haven't looked at Qualcomm, so I have to look at that. I know Nvidia I'm mixed. I think it's just such a high price, but I like KLAC. Because first of all,
No,
I was
that's a
looking.
good stock.
By the way, to getting to options, KLAC again, Delta. I'm out of. I mean, I'm just not. I'm de-risking more and more, but KLAC was interesting because now it's 1.25%. It went down, so you're paying 1.25% dividend. If you looked at it as a dividend stock, right, which it's got sure growth over the years, but it's been increasing its dividend at 11% rate. Revenues up 18%. Looking at TD, 5-year annualized 18%, 11% increase. So if that dividend keeps increasing, that should support the stock at least in any condition. And as I've said before, they're the supplier of they're the Levi's. They're the ones who's supplying the genes, or in this case, the equipment to make the chips. So I don't have to pick a winner in the chip space. They're all going to need this equipment, pretty much, and there's very little competition there. So I love KLAC as an option, and I sold long 450, and it's now down to 330 or something. But I'm just
Nice.
that'll just ride out, and because I done very well with Nvidia, but so that's my options play, in comparison. But I'm going to look at Qualcomm and see. I don't know anything
Cool.
about Qualcomm.
Nick, what are you doing? How are your stocks?
Well, we have some things from our viewers. One of them, Kathleen Long, said gold's unperforming. Yell buy, buy, buy. So I want to know what the panelists' thoughts are on
On
gold
gold?
stock. Yeah.
Good point.
Good point. I thought actually gold stocks went up in the last couple of weeks. I always, sometimes I get in the position, sometimes not. Right now I don't have one. It's Barrick Gold, which
Right.
symbol gold. So this is a giant company, but you know what? Of course, it doesn't pay any dividends to speak of. And what is your expectations? I think gold already has in its value the price of war in Ukraine. So will it go much higher from this point on? I'm not so sure.
Yeah,
Nick,
Okay.
what do you think?
I view gold. Gold is a tough call. I've always looked at gold. I have 3% GLD, pure gold, in my portfolio, and the reason is this is a hedge, because I think it's a great hedge against the unexpected. It's not as correlated to other things, but it's very hard to predict where it's going to go in the long run. Many people say it doesn't produce any income, and when you never know when to sell it. But the other side is um, and the negative, and also another negative, I should say, is if China does badly, maybe if the world economy does badly, and you would think that if energy and inflation is booming, you'd think gold would go up. But I'm not convinced of that. It hasn't been as correlated as it was once. And the thing is, if we're going into huge recession times, and let's say people in China are hurting, which I think, given the politics and the world economy and energy, that there's a good chance we're heading for recession. I mean, the U.S. yield curve is flattening. Everybody, there may not be a way to stimulate yourself out of inflation. I mean, we've been printing money, and the world has been printing money forever, but now the effects are hitting certain areas, like energy, maybe, and housing, certainly in the U.S. And all of a sudden, this is a different cycle now. So if now the Fed starts raising rates, housing prices could actually go down or flatten. Certainly, that would be their goal. And then, energy, who knows how high they have to make rates? I've heard before, the Fed cannot control energy. So if China's hurting and the U.S. is hurting, maybe gold isn't that safe a play. Now, the other point, I know to say the other point is, I think Bitcoin is worth zero, basically, probably. As Paulson said, hedge fund says, he says that it's a scarce amount of nothing. And I think a lot of the money that should be going into gold now is going into Bitcoin. But
I think so. Yes.
but Bitcoin is very volatile. One, it was up to 60s. Now it's today at 43. It's all over the place. But my main point on Bitcoin is that, and this could help gold a lot in the next few months. The head of the CEO of Intuit said that people are going to be shocked by the tax reporting that's required now, because in the infrastructure bill, they now require reporting on Bitcoin. So people who think, oh, I have secret Bitcoin and I don't have to pay tax on it, or I don't have to worry about my gains or anything. All of a sudden, there's going to be all this reporting. And he said, and it is, I've heard this before, it's a nightmare because the exchanges don't keep accurate figures on the basis. So because it's chaotic. So now all of a sudden people say, not only do I have to pay tax on my Bitcoin and it's not secret anymore, but I have to figure out what my gains are, and this is a pain. So it's like the MLPs, where you say some people don't want all the MLPs because the extra accounting costs.
Peter,
So
what do you
the
think
whole thing
is
is going to probably blow up, and then that money, some of it could go to gold, but
Peter?
I
What
I'm
is
just not that confident.
what is the probability of Intuit accepting Bitcoins for payments?
The what?
What is the probability of Intuit accepting Bitcoins as a payment for their services?
I don't know. Nick hasn't been able to use his Bitcoin
I
anywhere.
can't use my Bitcoin anywhere, but I got another commentator question. They want to know what your thoughts are on this stock called Too Simple. What it is, it's a company that does trucks that are driverless trucks, so they can transport things driverless as a long-term investment.
My comment would be easy. Unlike Kramer, who has some good ideas, but he seems to be an expert in every stock immediately. And he'll say, he'll say, oh, this company, buy, sell, buy, sell. It's like he's an expert on everything.
Right.
I'm not going to talk about a company without doing a lot of research. So what I'm going to do is look at the cash flows, look at the, I mean, you can't, nobody can do this off the top of their head. It should take, I'll look at True Simple, and maybe next week I'll, talk about it if we take some time, but I can at least look at it for 20 minutes, half an hour, and look at the figures, you have to look at the qualitative and the quantitative. This is all I can say right now. So I always start with cash flows, profits, the industry, and the debt to asset ratios. Then, in order to pass my screens to what stocks I want to buy, and I don't have many losers over the years, but then you have to go to the qualitative. So I'll look at articles, on Seeking Alpha, for instance, and other websites. You can just Google the stock, and so you have to get, every time you buy a stock, you're buying a business. So if I was buying a business for myself, I might spend a year just finding the right business, right? People spend years sometimes looking for the right business to buy. So as you're trying to find the right business that you're comfortable with the right financials. So if you're looking at any stock, you better spend at least half an hour analyzing it. That's my only advice today, but we'll look at True Simple, or I'll look at it next week, maybe.
Yeah, there was another commentator said about MPLX. What are your thoughts on MPLX? They thought they were intrigued by the discussions relating to MPLX.
Oh, well, that's my number one recommendation. I like it at 23. I like it at 28. I like it at 33.
Do you like it at 33? I guess that's the question.
Yeah, I mean, look, there's a big short interest in that stock, which is like 5%, and I don't know if it's against options or whatever, but it could go down eventually, a bit, because people are trading it, they're manipulating it, because those 5% wanted to push it down. But to me, it's a utility with a 9% yield, give or take. I have to look at it. It's got the easy cash flows to cover people are going to need natural gas, and now all the politics are helping this. As a matter of fact, that leads into one thing, because we're getting late, and I like to give a dividend stock too.
Sure.
So I can talk about MPLX and EPD combined, because they're very similar. And I raised my EPD. First of all, my MPLX is, in disclosure, over 20% of my portfolio. And I wish I almost
good place to park it. Yeah.
Well, yeah, but I don't want any more, but I wish I could have more, because I can't find another company like it in my mind. But EPD is very close. Same model. It's their natural gas and some oil and but people, it's demand based. They get fees. So EPD, I looked at it today, and the same will hold true on MPLX in terms of the thinking. EPD has a dividend of 7.5%, MPLX 8.5, but 90% of the revenues are on EPD have escalation clauses. So what could be better against inflation than the fact, and a large percent, 80% of their fees are fee based. So it doesn't matter what flows through the EPD pipelines and MPLX too. Most of it is, well, we've already locked in a 10-year contract. They're going to pay us X dollars. And then you have these escalation clauses, which means if inflation kicks up, they make more money. But they're both easily covering the dividend. The EPD cash flow is 8.6%, 8.6, which means they're earning about 12 or 13%. MPLX is similar. They're easily covering the cash flow. As a matter of fact, MPLX, not EPD, paid a special dividend that was fairly large 1 quarter ago, not this quarter, but that's because, and now they're buying back shares. So, and both of these pipelines, neither of them, they both have all these projects that are already, they've invested capital in. So when they come online, that's already more profit. So these are, to me, utilities that are priced like high risk energy companies. There's never a guarantee in the market. I'll tell you. Yeah, I could, you can lose everything, but I feel safer with these, especially with energy. Because now the new energy, even the liberals, who hate energy, and I understand why to a point, because they're concerned about carbon, but even they're waking up to the fact that maybe we pushed it too far, because Texas was burning oil instead of natural gas, and Boston was burning coal instead of natural gas, and these companies, by the way, MPLX and EPD, are largely natural gas. So, and then now Europe has a huge problem. They ban nuclear, and they think they're going to it's just not there. The energy, it's basically energy. You better have some energy in your portfolio so that I'm very big on MPLX. And I went EPD 2%, by the way, and I did drop my AM, which is 0.5%. And I think they'll probably do well, but I took a slight loss on it. The other AM I said already to reduce from 1 to 1.5. It's just a little more risky. The report wasn't great on cash flow. They're not quite covering their dividend, but as long as their projects all come to fruition, but then they're too tight. I want a company with cash flow that's, covering by 50%, 70%, a nice big dividend. And then if things don't go quite right, you're still getting your dividend.
So, one person asked, do you hedge currencies? And Sasha, did we miss a play a couple weeks ago about the ruble, that we should have basically shorted the ruble?
Oh my gosh!
When this thing, I know I didn't do it. I'm wondering if Shaquille did it, because he plays in the currency translation, so he may have done that. But I mean, to me, looking back, I was saying, Nick, that's an obvious play, to short the ruble. Now, the minute you say it's an obvious play, I go, boy, that was too late. But man, I thought at the right time, there's got to be people that figured that one out, shorting the ruble. And so the commentator wants to know about hedging currencies.
I just don't play currencies. Did anybody really know if Putin was going to invade Ukraine?
Well,
or not?
no. The thing is, I think you had time to actually, right as the invasion took place, because the ruble drop lagged the invasion. So you had time to wake up just a minute and short the ruble, because the natural next response by the West is to destroy the economy of Russia, which is what they did.
Well, but I think I missed example of, in hindsight, I'm the richest man in the world, literally the richest man in the world in hindsight, because
exactly.
but the problem is this: before they invaded, people weren't sure they were invaded. Then when they invaded, they didn't know how successful they would be, and they also didn't know that the Ukrainians would do this. I mean, this has been, the worldwide response is surprisingly strong, and also the Ukrainian response is much stronger, especially. I mean, people thought they might fold right away. Instead, it looks like this is going to be a long war. It's changed everything. But all that said, the longer this goes, it's probably not going to help energy, and we already have a huge energy problem. So, I mean, I wish I could find more. Maybe Sasha, you can, or Nick, you can find something in energy that I'm missing, because these pipelines are great, and I think they're very safe, high yield. Like MPLX, EPD, and I've recommended. I have a small interest in HESM, which has done very well, especially now, and a couple others. But much smaller percentages. Um, but I still don't have that. I tried CVX, and then I realized that internationally they've been losing money, the revenue, year after year after year internationally, and they make more domestically. So they've been basically not producing anymore. It doesn't seem like a great model with a 4% dividend. The thing about the EPDs or MPLXs is, if I just sit there, I get all my money back with the tax advantages.
Right, because
If
the
I hold
dividend.
it outside an IRA in 8 or 9 years, I got my money back, and I have all the future in the company. I'm pretty sure oil will be in demand in 8 years, and certainly natural gas, which is the majority of these companies. So, and natural gas liquids. But the great thing financially is with this situation is it's waking up the world. You can't hate energy all the way. Now the Europeans are going to demand more natural gas liquids. That's the only other place they're going to get energy. And if Russia's not going to supply it, and by the way, Russia's now making more deals with China. So if they give more of their oil to China, that's oil that's not coming to Europe. Europe is in trouble. I've stayed away from all European stocks for the year, because I know they're dependent. And Japan is totally, their economy, they import all their energy. So I've been US based because of the energy situation, and I would stay that way. I mean, people better prepare. It could stay at 110 or 100, but it could go to 150 or 250 or 350. Look, again, what Trump said is what I'm saying. It could be unlimited. He said it's unlimited where it could go, but I don't know, but I just know that there's a lot of problems with the market. It doesn't look like there's any balance, and I don't know what price it's going to have to go to, but it's inelastic, and I think there's going to be problems.
I think with energy, I think what's going to happen, and I think rather sooner than later, people in the United States will realize that all this the not nonsense, but notion of green energy stuff and all that has to go on a burner, really. Because if there is a threat of nuclear war,
Oh
so
gosh.
what means this nonsense of a green energy or a violet energy or any kind of energy?
Well,
what
that's the last energy we'll have, right?
Yeah, exactly.
Nuclear energy. I doubt it.
I always was leaning towards the okay, green energy, sure, why not to have a safer environment or so on. But right
Oh,
now,
yeah.
I turned out to be 100% against that. You don't need to please Greta, what's her name, and
Yeah.
and just concentrate, get oil and
You know,
gas out of the ground as much as possible.
well, you know what?
Get oil down to $20, not $200.
Well, it won't go to 20 again. The oil companies are not going to produce enough to do that, and
Fracking,
they
fracking
made the
alone,
mistake twice.
I
But
believe that fracking alone can change the situation with oil. Really.
well, especially not if Russia's. The world's already forecasting 1 million barrels a day shortfall. That the OECD is supposed to have 1 million barrels a day shortfall next year, but they underestimated the shortfall in 2020 dramatically. So it will increase the fracking, but the U.S. doesn't have enough oil for the world and for Europe, and enough natural gas liquids. So the Russian thing just is on top of everything else. Everything, OPEC's not producing more, and the fracking will help, but I don't think the U.S. will produce enough to supply the world, and we'll find out. But it's not going down anyway, So
But
I
Peter,
don't think so.
just a year and a half ago was a situation when oil had negative worth. Nobody wanted to take oil even for free. Nobody had
I know.
facilities to get
Well,
the oil. So
it's a cyclical industry.
it's a cyclical, and I believe that once
Yeah.
fracking get up and going, and it will take probably several months, maybe 6, 9 months. I think U.S. can easily satisfy at least their own needs. I'm not sure.
Well, we were energy independent a year ago, and now we're far from it. As a matter of fact, we've been taking Russian oil. I think,
I know,
you know,
not anymore, not
we're
anymore.
taking, yeah, but we have to make that up.
Russia has all markets closed for its oil and gas.
Well,
Period.
yeah, well,
Eat,
that could
drink.
happen, but then the forget it. I mean, I'm talking about a problem with energy and oil based on underinvestment and everything going on without Russia. You add Russia in, and they're the second largest producer of energy in the world, and most of that energy is going to Europe and the U.S. and everywhere. If they're going to be out of it mostly, and if the Ukrainian situation goes on, I think there's going to be a lot of pressure on Putin to compromise now. He's not winning, but who knows how
He can't
stubborn he is.
compromise. There is no one to compromise
No,
with.
no, no. He would do it to save face if things get too bad, but we'll see. And nobody knows. I mean, look, we're talking about. We'll see. I mean, we're running out of time for the show, so.
Okay.
But by next week, who knows what will happen? Hopefully, Ukraine will keep fighting and
Exactly.
everything.
We'll know much more next week than today.
Right, exactly.
That's for sure. Thank you so much for today's show, Peter, Nick, and we'll definitely see you next Wednesday. It's IBM TV, POT TV, Modern Investing. Thank you very much.